core inflation. Could inflation be down? What have I been saying? I've been saying a rally on Friday, but it comes down to CPI and PPI. What have I been doing? I've been buying the dip all the way down. I'm bullish, but it is scary. My prediction was inflation is coming down, and my prediction was that we'll get more rate cuts this year. Fantastic. Shall we now go over to the report on inflation? Here we go.
Yes, boy, this is a biggie. This is our February read. Consumer Price Index.
Huge.
Expected up 0.3, comes in a tenth light, up 0.2%.
Yep,
and
that's
in the
it.
rearview mirror, at least now, not revised, and up 0.5%, by the way, was a 2-year high we're reversing from. Up 0.2 equals where we were in October. To find a lower number, you're back to July of last year. Strip out the important food and energy, it remains up 0.2 on core. That's following up 0.4, which was the highest level since Feb of 23. 0.2, well, we equaled Dece of last year. Find a lower number, you're in June of last year. Year over year, headline number, 2.9 expected, 2.8 is what we get. Last look was 3%. 2.8 to find a lower number. You're in November of last year when it was 2.7. And do remember that cycle at the end of last year, we actually saw 2.4 on the September read.
Rate cuts
just
are on the way.
Face on the fact that we have been lower. And if you look at ex-food and energy or core year over year, 3.1. 3.2 was what we were expecting. 3.3 in the rearview mirror. 3.3 in the rearview mirror was the highest since May of last year. 3.1, to find a smaller number, you have to really go into the Wayback Machine. You're going to April of 21 when it was 3%. Now, I know many don't look at the following, but if you look at the actual index of CPI, that goes back to 1913. Right now we have 319.082. That's another all-time high going back to 1913. If you look at core, that was started in 1957. It comes in at 325.47, and guess what? Another new all-time forever high. Go use that inflation tool on the Bureau of Labor Statistics and the website, and what you'll find is inflation's running over 20% on a compounded basis going back to pre-COVID. Interest rates initially moved lower as they looked at the month-over-month numbers. You know that parlor game, you analyze these numbers, but in the end, they're still sticky. And just to point out something, our last look, still unrevised, these inflation numbers were hot last time, unlike today where they're a bit cooler. And what happened? We settled on February 12th, the last time January CPI was out, at 463 in a 10-year. It was the high water mark. Hot inflation, all we've done since is go lower. And the reason I point that out is there's a lot of moving parts pushing yields around these days. Andrew, back to you.
Okay, fantastic. What a great day. There is the inflation report. Exactly as I predicted. Again, we got the fear mongering all over the place. People telling you the world was going to collapse. It was painful seeing it go down. But I said, and I acted with my own money. You know, I bought every single penny of my cash. Look at it. My buying power is nothing. That's remained. That bit of buying power is what's left of my margin. I am all in on cash, all in on margin. I've been buying the dips. I wish I could have bought more, but I couldn't buy more. I couldn't be more bullish, but it was painful to watch it. This could be, I don't think it will be, but it could be a $60,000 day. That could be my upswing today on my portfolio. This is great news. Inflation is coming down exactly as expected. We could get now a rate cut in March, which is next week. You don't want to miss that. I'll give you all the links to that as well. This is very, very exciting. Fantastic. Can you believe it? Well, yeah, you can believe it. This is what I invested in. I bought the dip. I just wish I could have bought even more. I did everything I could. I even sold my solid gold credit card from Robinhood to buy more. Bought every single share I could, in addition to what I already have. This is a great, great day. Now then, what do? Don't chase it. It's great that it's up today, but what you should have done is bought on the way down, not on the way up. Please don't buy it now, because Wall Street could dump this on the bell to do it all over again. This is what happens. Be careful. You already bought the dip. Do not chase it. If you get an opportunity to buy the dip now, you've now got an insurance policy. You've got a protection knowing that inflation has come down, knowing that rate cuts are more likely. It's a good day. It's a great day. But remember, we're not counting the tariffs yet. The tariffs are short-term inflationary. There's no data on that yet. That will come next report, okay? So just remember, we haven't got that yet. But if the tariffs go away, then inflation goes away on the potential tariff issues as well. So what you do now is what all investors always do. You buy on the red days, you bought on the way down, and today you've got rewarded. That's what it's all about. Those that shorted the market have lost their money today. Hooray! I have no problem with that. So there you go. This is a very, very good day for investors. Don't chase it. Let it go. When it pulls back again, if it does, maybe it will, maybe it won't. It's massively oversold. Maybe this was the bottom. I said it was the bottom. Maybe it was. I don't know. But I said to you, a rally on Friday. How many videos have I put out saying a rally on Friday? Put my name in the sand. I've not deleted it. I've not edited it. I've left it there. Rally on Friday. But it comes down to PPI tomorrow. PPI is even more important than CPI. Of course, we'll cover it live. And then we'll cover the Michigan report on Friday. Equally volatile, because it's very political. So it's not all over yet. But as investors, you bought on the dip, you're being rewarded. Don't chase it. You'll be fine. This is great. Click above my head for all the links down below in the description. And over here and over here, I'll put more information and more things I think you'll enjoy. Exactly as predicted for investors. I've been saying for the longest time, it's painful. But investors dig the ditches when everybody else cries in the sink and buggers off, basically. They're not watching the show. They're not investing. They're all, oh, my God, we only like the green days. You watch how busy it will be today on a green day. Over here, over here, over here, over here. Until next time, take care of yourselves and each other.